There are some investments, your car, that eat up all of your money, and then there are some investments, real estate, that put more money in your pocket. The reason why you invest your money is so you can be financially free and do the things that you want without having to worry about money. But all investments don't work the same. Traditionally, when people talk about making a passive investment for income, they talk about investing their money into the stock market, into a dividend-paying company. So you look for a company like McDonald's that's been paying a good dividend, you invest your money into McDonald's, and then every quarter, McDonald's is gonna give you a dividend check. But I prefer real estate rental income, and I'm going to show you why. Real estate is the best place to generate passive cash flow. The way it works is you can go out and buy a property. This can be a house, this can be an apartment building, this can be a mixed-use building. You go out and you buy this property, this building, and then you're going to lease it out to somebody else who's going to use your building. So in this case, we'll use a house, and now I'm going to lease it out to this nice person with a mustache, with his wife who has a braid, or as we like to call it in my native language, Punjabi, a gut. This nice couple live in my home. Now, in exchange for them living in my home and using my home, they're gonna pay me $1,500 a month every single month for living in this property. I don't have to do any work after they move into the property because now I already own the asset. I'll give you another example of this. The Minority Mindset Company's office right here is 2 floors, and I pay $4,300 a month to lease our office space. So this is money going to the landlord. I don't really see the landlord ever, but I give him a check every single month, and this is money that he uses to pay the mortgage for this building and put some money in his pocket every single month. The reason why I say real estate is the best place to generate this type of passive cash flow is because, for one, if you do it right, you're going to be able to rent it out to somebody else, and this rent that you get is going to cover your expenses, your taxes, your insurance, your maintenance, your management fees, and it's going to put some money in your pocket every single month. And if you do it right, you can hire a property management company to deal with all the day-to-day work. So if something goes wrong, if the electricity stops working in this office, I could just call up the property manager, and then the property manager will take care of the issue, and the landlord won't even hear about it. So I like real estate because of the cash flow that you can get, and it can be pretty passive. I'll explain why I say pretty passive in just a second, but the second reason why I like real estate is because of the tax breaks that you get as a real estate investor. Now, although I am a licensed attorney, I'm not your attorney, so if you have specific tax questions, talk to a tax professional in your area. But the IRS rulebook gives real estate investors some of the biggest and best tax breaks that our tax code has to offer. I'll show you what I mean. So if I can rent out this home for $1,500 a month, and let's assume for the sake of this example that my expenses are $1,000 a month to own this property. That's my taxes, my insurance, my maintenance fees, my management fees, and my mortgage is $1,000 a month. This means that every single month I get to put $500 worth of profit into my pocket. This is the money that I get to put in my pocket, which means every year I'm putting $6,000 into my pocket. Now, generally, when you make $6,000, you have to pay taxes on $6,000. But because this is real estate, you get a little bit of a tax break. You get to tell the IRS, hey, I made $6,000. This is the money that I put into my pocket. But because my property is 1 year older, I deserve a tax break. So going back to this home, let's assume that when you bought this home, it was $20,000 for the land and $150,000 for the actual house. Now, you will get to tell the IRS that because this property that I bought is 1 year older, I deserve a $5,500 tax break, which means you put $6,000 in your pocket. This is the money that's in your bank account, but you only have to pay taxes on $500. This is your taxable income because you get to take this depreciation expense on your property. You calculate this depreciation number based off of how much you paid for the property, but this is a paper depreciation. It's a paper deduction, meaning you take $6,000, put it into your pocket, you can spend all this money, but you only have to pay taxes on $500. This reduces your taxable income and your tax rate because your income is less. This is the first reason why wealthy people love investing their money in real estate, because you can make a ton of money and pay next to nothing in taxes legally because the tax code says so. And the second reason why wealthy people love investing in real estate for the tax breaks is because, well, let me just show you. So you bought this home for $170,000. You paid $150,000 for the building and $20,000 for the land, a total cost of $170,000. Now let's assume that you own this property for a number of years. Every single year you rent it out, and every couple of years you raise the rents, meaning you make bigger profits. And then some time goes by and you look at Zillow and you see, oh, I could sell my property for now $1.7 million. Now, this does happen in some instances. Most of the time, you're not going to see this type of exponential growth in just a few years. But if you're invested in a good area where you see growing demand, where people want to be, you're going to see the prices of your real estate go up. So assuming that this property value goes up from $170,000 to $1.7 million, and now you sell it, well, now you have a almost $1.5 million gain, which means you got to pay taxes on $1.5 million. Now, even if you have a low tax rate, because investors get lower tax rates, that's still a lot of money. But real estate gives you another exception, because now what you can do is you can take all of this money, you take the $1.7 million and you go out and you buy a bigger property. Let's assume that now you buy a bigger property with multiple units. I clearly am not a good artist here, but you go out and buy a bigger property with this $1.7 million, and this $1.7 million property is going to pay you with more rent, more profit because it's a bigger property, and bigger tax breaks for your depreciation deduction. But now the advantage not only is that you own a bigger property, but you don't have to pay any money in taxes today. This is called a 1031 exchange. It's called a like-kind exchange. You don't get this in the stock market, but you get this in real estate, where you can flip your property after 1 year. You own the property for a year, you can sell it for a profit, flip it into a bigger property, and pay $0 in taxes today. And you can do this again and again and again, keep flipping properties into a bigger and bigger and bigger deal. And you can do this until you die and never have to pay a penny in taxes on these capital gains. This is what wealthy people love doing with their real estate, because you can just keep flipping into a bigger property every year or every couple of years, whenever you're ready. You can just keep flipping the property into something bigger, and you never have to pay taxes on those gains as long as you do this 1031 like-kind exchange. Now again, make sure you talk to a professional, an attorney, a tax professional in your area, that way you're doing this the right way, because there's a lot of regulations that are involved with 1031, but this is one of the biggest loopholes for wealthy people, because now once the numbers start to get bigger, you just keep adding on zeros and you keep going into the bigger deals and the bigger deals, and now your rental income goes up, which means you have more cash flow to live off of. The key here, for one, is this requires you to buy real estate not for you to live in yourself, but for you to rent out to somebody else, because now this becomes an investment that you're buying for the sole purpose of making money. And second, you have to understand your market and you have to understand the type of real estate that you want to buy. I like residential real estate because this is a innovation-proof real estate. We're always going to need a roof over our heads, no matter how crazy the metaverse becomes, which is why I like residential real estate. We've seen retail real estate get hit so hard because of the digital revolution. We've seen office real estate get hard because of the pandemic and people working from home. Those two will keep going through innovative shifts, and they're going to be changing a lot. But residential real estate, we know that people will need a roof over their heads, which is why I like single family homes, which is why I like apartment complexes. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.